Yo, hey man, say man, how's your day, man? It's Forever Trader GDO coming back with another video, man. We about to go ahead and get off into this lesson, getting these charts. I ain't about to waste y'all time because I don't want you wasting mine. Y'all want to learn how to trade? I'm about to teach y'all how to get paid. Oh, oh. Y'all know my baby sleep. Y'all know my baby sleep. Stop playing. Now just put him down. He sleep right now. You hear me? But we still getting that money. Ooh, wee. All right, I don't know. See, where I'm at, bro. It's cold one day and hot the next, so it's trying to get me sick. But my immune system too strong for that. So last night it was trying to go ahead and beat it. You feel me? It was trying to get it about me. But let's go ahead and go. So I really woke up at 9 this morning. Man, my wife woke me up and she was like, "Oh, baby," she's like, "You okay?" I'm over there looking slob on my face and everything, man. So y'all already know what we do when we come to the market, man. We go to the highest time frame that we feel is relevant for price action, right? Relevancy is regarding where price is most likely to come in contact with, right? So you guys know that we mark out our internals, our externals. You see I have my daily internals. What are internals? Fair value gaps, inverted fair value gaps. What are those things? 3 candle patterns with an opening between the first and the third candle. Okay, so 1, 2, 3, 1 and 3, there's an opening. You had 1, 2, 3 opening, but I chose this, right? So 1, 2, 3. And the more time you have on the charts, the more you'll kind of find your groove on what you want your internals to be. Because there'll be times where you can have multiple, but you have to ask yourself, is it necessary, right? All right, so daily, we took care of the daily. We have our dailies that we expected it to go. We have our 4 hours, right? Well, it was really just this one. I see 1, 2, 3 had that guy, had this guy, but there's no point in putting him. And maybe I should have actually, but I'm glad I didn't. You got this guy, didn't put him. And everything down here, you have this guy, so it will look something like this if you drug it like all the way to the right. And that's okay, not really, but it will look like that. You feel me? And to be honest, bro, without me even saying nothing, you see how price reacted off of it. So that alone should tell you, like, it should make a light bulb like ding off in your head. You know what I'm saying? Because without me even saying anything, me marking out this 4-hour inversion right here, which is an internal, look what it did for price on Friday. You know what I'm saying? So nothing in the market is random. It's always going to be a reaction off of internal liquidity or external liquidity. And I didn't mark this up for my trade today, but you know, it's good to show you guys how price really reacts, because this was a solidated, like, you know what I'm saying? So I had my 4-hour. Then, of course, after the 4-hour, you go to your 2-hour. So my 2-hour internal, I got 1, 2, 3, open between the first and the third. That's my internal. And then what's really important for me that I see on my mornings is that hour also. So we have an hour right here. You have an hour right here. I picked this because it would probably come in contact with the price action first. And of course, I put an hour right here. So you have 1, 2, 3, opening between the first and the third, so hour. And those are the draws of internal liquidity that I marked out for today. Now, let's go to my external draws liquidity that I marked out. As you can see, I marked my chart out on the 2. I enter in on the 2-minute, right? I used the 5-minute for the draws of external liquidity. When you see where my price, where my external high for the 2-minute was, it was at 920. Well, 928, 930, 928 made it seem as if we were going to go down, right? So there was no reason for me to put an external low yet, because the solidifier candle hasn't come up yet. You know what I'm saying? And what is that candle? If we're going down, in order for you to mark out a lower low, it needs to have the opposite candle, which is a buy candle. If we're going up, in order for you to mark a higher high, it needs to have the opposite candle, which is a sell candle. So in this instance, the 930 was that solidifier. Well, after 930, 932, we broke to the upside. And as you can see, we started going towards these external liquidities on the and I marked these out on my 5-minute, right? Every morning I come in, I make sure I mark my 2-minute first, and then I go to my 5-minute and just mark out the external highs. You feel me? You see how I did that, and you see what price did. We didn't go all the way to the daily internal, but you gotta understand the daily internal is a that's the big dog. You feel me? That's one of the big dogs. Daily, weekly, monthly. Yeah. Price doesn't even have to touch those. It could just come in the vicinity of those, and it can either allow price to come in and interact with the internal, or push it away. And that's just what it is, right? So for me, it was very easy. You guys know what the exceeded edge model is by now. Break after 9:30. Ask yourself after that break, where is the nearest high time frame internal? High time frame internals being 1 hour to the monthly, and that's just because that's what I use. All right. If there's no close high time frame internal, whatever direction it is, however far that internal is, catch price action too. If it's close, you allow price to contact that internal, catch the reaction, which is a break of structure, right? And then execute, which is you entering your trade. So for me today, again, coming into the market, I know, let's see. I know that this was a lower high and this was the lower low. Okay, well at 9:26 we actually broke that low, right, making this the new lower high. And when we get a solidifier, right, which is the opposite candle than the sell candle, then we can mark this as the lower low and then the lower high. All right, now 9:30 is in. 9:30 gave us a week to the downside, and it's like at this point there's nothing to do. Okay, what you do is you just wait. You have to wait for price to tell you what it's going to do, because it communicates with you clearly. You have to be a good listener. You get what I'm saying? So being that 9:30 solidified this lower low, we have a lower high. We were in a downtrend. So when we break this high to the upside, that is called a break of structures. Break of structures are referring to breaking the external high or external low in the opposite direction. If we keep breaking to the downside, that's not a break of structure. That's just simply a break, because we're continuing the direction, which in this case was a downtrend. But because we broke the lower high after solidifying the lower low, that is what you call a break of structure. What are break of structures? Break of structures is the chart literally telling you, hey, we're done with this for now. We're going this way until something stops us. And what usually stops price action, right? Usually external liquidity or internal liquidity. Well, as you can see, everything kind of aligns. You have this external right here, right? It's right below the 2 in the hour. You have this external, right? And then you have this external, then you have this external. My boy Rich in the group chat, he asked me, he was like, do you think we're gonna go for that daily internal? Remember, this is my daily internal. We marked that out on a daily time frame. I say yeah, if it gives us a double break, because it breaking twice to the upside, especially coming out this internal, is telling us, hey, we're still going in this direction, right? So a double break will look like this. This was the lower high. This was the lower low. All right. We broke to the upside. Now, this candle was the causation for this buy leg to break this high. All right. But until we get the opposite candle, which will be the solidifier, I like to call the solidifier, we cannot mark that as the new high. Once that candle is in, we can mark it as a new high. We broke to the upside. And if you wanted to enter, you wouldn't have gotten a lot. You would have got you 60. You would have got 62 points. You know what I'm saying? Of course, you would have been targeting this right here, or at least this. You would have been targeting at least 100 points, and it would have given you 62 points, right? So I was trading at $10 a point, right? Which for M&Q is 5 contracts, and I made 750, right? 750. So I made that in realistically 4-6 minutes. So $750, 4-6 minutes. That's an easy day. That's a beautiful day, and there's nothing else to do. And I'm about to go lay with my son, study some other stuff, and keep being productive. So, because like once you make that money in the market, you cannot go about just wasting your day, right? You can't do that. You have to continue being productive. You have to continue being great, right? How you do one thing is how you do another. So if you guys want to learn how to trade like this, man, if you guys want to be around like-minded people that get to the money every day like this, put in the work like this every day, link in the bio, join the Discord, become a Profit Time, man, or visit Never Quit Exceed, find your way, bro. Change your life, bro. We do this every day. This is my life. I don't do anything else but trade. So, hey, man, I know you're having a good day, man. It's Forever Trader GDO coming out with another video, man. Yes, sir.